Hello, everyone. It's Marc Drapeau, 2020 New Hampshire Realtors President, and it's Tuesday, April 21st, which means we're 25 days into New Hampshire's stay-at-home order and certainly right in the middle of the coronavirus crisis and social distancing. We're all aware by now that Governor Sununu's order listed real estate as among essential businesses, allowing us to remain open under very specific conditions. But we also all know that this has not prevented the market from changing. Just how much has it changed? Well, that of course depends on whom you ask. And it's one of the many questions that brings us to our guest today, a man we feel very honored to have with us. He is the Chief Economist and Senior Vice President of Research at the National Association of Realtors, Dr. Lawrence Yun. Welcome, Dr. Yun. I can't even imagine how busy you are right now or how in demand you are for discussions like this one. So we'll turn it over to you for a presentation on the economy and housing market in light of the pandemic, after which we hope there's time for a few questions.
Thank you, President Marc, and for leading. I always admire State Association President, who dedicates so much time for the benefit of the association as well as for the benefit of the community. So thank you, President Marc, for introducing me. We are certainly in an uncharted territory. Back in January or even November of last year, I was looking forward to 2020. We had home sales essentially steadily increasing, but 2020 I thought could be even a breakout year, much higher based on the fundamentals of lower interest rate, job creation, all-time stock market. But everything has changed from about mid-March, or I should say even earlier. Stock market was correcting even earlier, late February. And then many governors placing a stay in shelter directives. In some states like Pennsylvania and Michigan, strong lockdown where one cannot even show a home. I heard a story where police almost arrested a realtor for trying to visit a vacant home just to see what it looked like inside in Pennsylvania or Michigan, where they have a strict lockdown situation. Most other states do have a social distancing measure, meaning I'm in here in Virginia, just right across the river from DC, where the office is, where people can visit homes. They can show the home through private appointment and the necessary social distancing, sanitizers, gloves. In these states, sales are in April down, but not drastically as say Pennsylvania and Michigan. Every state make their own decision, but I'm here to talk about New Hampshire. And New Hampshire economy was actually in a very fine state. Let me use my little slide. So I'm gonna, let me see, use the share screen and bring up my slide now. So, all right, and put it in the mode. There we go. So this is the measure of the economy, and for people who are active with NAR, and who visit Washington to talk with your senator or House representative, you will come to Washington. And this time last year, we had 8,000 realtors in Washington. And we always invite the sitting president to address our realtor audience. And President Trump accepted our invitation. And he spoke about all the positive numbers on the economy, because the economy was growing and continued to grow. But 2020, I put the adjective ugly, because certainly we are facing an unprecedented time. It is going to be negative for the whole year. The second quarter, just the second quarter data, GDP forecast is something like minus 30% or even minus 40%, unheard of negative number. But this negative number is not due to the fault of entrepreneurs or somehow there is some imbalances in the economy. It was just a government directive to say we have to shut the economy down in order to contain the virus, flatten the curve. So it was a government mandate to bring the economy to a halt, hitting the wall, and hope once the virus is contained or vaccine discovered that we can have a back to normalcy. But given that we pressed the pause button, we cannot recover all the period economic activity during the pause button, especially in real estate. There is a spring buying season. Why is it called spring buying season? we do more transaction during the spring than any other season, for the reason that many families with school-age children want to make the move before the beginning of the next school year. They don't want to move during the middle of the school year so as to not to disturb the children from readjusting to new sets of friends. And hence, if we miss the spring buying season, but we do have a recovery later in the year, I'm not sure if the recovery can fully compensate for the lost sales during the spring buying season. But as President Marc mentioned, with social distancing, serious buyers still can make transactions happen. The electronic signatures, or I'm not sure what is in New Hampshire, whether you meet at the parking lot and pass over the papers for signatures, but there's many things, virtual tours, the private appointment visits, the external appraisals, so everything can be done transactions. So right now, one trend that we are seeing is home buyers who are very serious, who used to view 10 or 12 homes before deciding. Today, they're doing everything virtually and making the physical visit only to about 2 or 3 homes before deciding, and hence getting the transaction done. This is the job market in New Hampshire. As I mentioned, it was on a solid basis. Even back during the last Great Recession, New Hampshire actually held on reasonably well. Even during the Great Recession 10 years ago, foreclosure prices, unemployment rate only went up to about 7% in New Hampshire, one of the better performing or holding on better compared to the rest of the country, because New Hampshire actually does better than the rest of the country in most economic front. In fact, New Hampshire is one of the very few New England states where people are moving into. So even as people are moving out of Connecticut or out of Rhode Island, Maine situation is very sluggish in terms of new people moving in, Vermont, but New Hampshire somehow gets more people moving in versus people moving out. So New Hampshire is one of the positive light shining if one just purely look at it from economic perspective. Boston is doing well in Massachusetts, but Boston will be that one other exception in New England states where things are moving positively in the economy. But that was before the pandemic, and here's the pandemic impact. So the number of people filing for unemployment insurance, that small dots, suddenly blowing up from mid-March, very high figures. Here's for New Hampshire. So New Hampshire, I don't even know what that small line figure was before March, whether it was about 500 people filing for unemployment insurance each week, then suddenly blew up to 30,000. The next week, another 30,000, then 40,000, and now it's coming down to about 25,000. But these are a strong number of people who suddenly don't have a job, who used to have a job. Government is recognizing these are hardworking Americans. It's not due to some bad decisions, or somehow businesses made bad business entrepreneurial decision. It's just government order shutdown. And hence, the spirit of the stimulus bill, which is massive. I thought back 2008 and 2009 stimulus bill was massive. This is like 2 or 3 times larger than that, because the spirit of the stimulus is to make sure that people are not harmed financially during this pandemic impact. We lobby hard so ensure that independent contractors, self-employed individual can tap into unemployment insurance. I know you are all business-minded people. You want your business to be active rather than the unemployment insurance, but just view it as a financial resource to buy some time until the economy reopens. On average, I think it's about $1,000 per week. I'm not sure each state there will be variation, but the federal government is providing $600. New Hampshire will either add a few dollars to that, but on average, it should be about $1,000 per average across the whole country each week to at least give you some financial resource during this downtime. And once the economy reopens, hopefully your business activity is back up and running. The other part that I wanted to mention is if your state system is not ready for providing unemployment insurance for independent contractors, just reapply until the system is up. It will be made retroactive, just dated as to when the business slowdown so that you can recover all those missed weeks on that payment. For the brokers, tap into the Small Business Administration loans. That money ran out very quickly. The popularity of it, or I should say the enormity of the economic harm that is currently in place. But second round of Small Business Administration loans should pass this week, so more money available. So get ready to apply. There's some inequities in terms of some realtor brokerages. We have heard they were able to get it. Others, they're frustrated about people not returning the phone call, the paper, the bureaucracy behind it, or the banking relationship is not there. But the money, again, the spirit is to say that we don't want entrepreneurs harmed during this period when government imposed the lockdown. Housing market, this is a national data, but New Hampshire will very much follow this path. So 2008, 2009, low point, and then steady increase as the economy gained jobs. Some people ask, are we going to face something like 2008, 2009 for housing? And everyone can have their opinion, assumptions about what may happen in the future. We don't know the path of the virus, vaccine discovery and so forth, but facts are still facts. And there are a couple of facts that is worth noting. Back in 08 and 09, subprime lending, people overstretching, no income documentation loans were available and people used it. Today, we don't have that. And therefore, people who took out mortgage in recent years, they are very sound credit, financially worthy individuals, and hence with completely different mortgage picture. Another factual difference, back in 08, 09, home builders went wild, they overproduced. But today we have inventory shortage. You can talk to anyone from, say, Manchester to say if there was one housing challenge in 2019, they would say lack of inventory. If they have more inventory, they can get more deals done, but it was lack of inventory. So we don't have overproduction, oversupply. Fundamentally different this time versus 10 years ago during the Great Recession. Once those bad mortgages blew up, of course, we had a foreclosure crisis. Today, we don't have bad mortgages, and also we have mortgage forbearance. Some people who are filing for unemployment insurance, again, they need to buy some time so they can miss out on a few months of mortgage payments on those government-backed mortgages. Even private mortgages, they are permitting, and many of the banks are permitting, but it's not a free lunch. That missed payment will simply be tacked on at the end of the life of the loan. If they require balloon payment, be very careful or re-discuss to make sure that it's stretched out over a longer period rather than a balloon payment, because balloon can also cause some problems. But we don't anticipate any foreclosures, especially as people who are unemployed today return back to their jobs once the economy reopens. Will people return? Well, just consider barbershops, hair salon, dental offices, daycare, they're not working today. But is there a strong demand once the economy reopens? And the answer is yes. Maybe the restaurant business will not be fully back up, but takeout business is right now ongoing, and maybe the takeout business will come along as people have their normal income from jobs. But some industry, it will take multiple years. Cruise ship business, airline industry, I think it's going to take a long time. So not every sector will be back up to normal, but some sectors, I mean, it will be quickly back to normal, 100% up and running once the economy reopens. Inventory shortage, I mentioned, this has been one challenge throughout 2019. And what do we have here in mid-April in New Hampshire? Even fewer listings. So there was an inventory shortage, but there's even fewer listings today. When you talk to the sellers, why fewer listings? They're saying, well, I just want the economy to be back open before listing. So many people are just simply holding back until the economy reopens. There's fewer buyer interest at the moment, but there's fewer buyer interest, first for safety reasons. Second, many people want to comply with governor's orders of shelter in place. And the third reason is buyers want to see more choices. They don't want to see just one or two homes out in the market. They want to see, 10 homes a possibility. So once the economy reopens, inventory begins to show up again, that's when the buyers will also begin to make their action. So completely different today versus say 2009 when we had a foreclosure crisis. The monetary policy, meanwhile, is all in. Back in 08, 09, Federal Reserve, they took 8 months to bring the interest rates down to zero. 8 months, 8 rounds of rate cuts. This time they went all in all at once, which is the reason today you have essentially record low mortgage rates. So the red line here you see is the 10-year treasury. Blue is the 30-year fixed rate mortgage on Fannie Freddie backed mortgages conforming. And generally they synchronize, move almost 1-to-1. But if there is any gap difference is right now. Based on the treasury yield, 30-year fixed rate mortgage should be more like 2.7% rather than 3.3% average. So there is a possibility that mortgage rate could go down even more than what it is already the condition. So maybe some of the refi demand has to die out because refinance demand is so strong. Lenders wants to put a little barrier for purchase applications, and they do that by putting little artificially high interest rates. But there is a room to go down. But the jumbo market is not functioning. So people who are looking for jumbo mortgages is very difficult to obtain, or at a higher interest rate or higher credit score requirement, 20% down payment. But Fannie, Freddie, FHA, government-backed mortgages, those monies are available at 3.5% down, 3% down. So just keep that in mind. Consumers should not be scared away by some headline, mortgages no longer available. Those are only for jumbo markets without government-backed mortgages. In the scenario, if the prices were to decline, that is not my forecast. On average, I mean, some property prices will decline, but the median price across all New Hampshire prices, I don't anticipate to decline. In fact, it will probably squeeze out some gains. But let's assume the worst case scenario of say 5 or 10% price decline. Green line shows the real estate valuation over the years. Red is the mortgage balance. What this shows is that there is a sizable housing wealth buffer to absorb some price decline if it was to occur without leading to massive foreclosures. Some people on the margin, maybe they go underwater, but there's very few people on the margin. There's a sizable equity among homeowners in New Hampshire. So the situation is even if there was a price decline, the market can absorb without leading to any other repercussion in terms of sudden rises in foreclosures. Any foreclosure increase that you will see in New Hampshire will be more related to people who are unemployed, cannot return to job even as the economy opens, and they remain unemployed for over a year, and that's when you get some foreclosure increases just from the economic impact, not from bad mortgages. Housing start has been underproducing, which is the reason why we have inventory shortage. For the sake of time, let me just move on quickly. This is the table that I have been using to speak with brokers across the country to say that as you think about your business plan over the next 5 years, what can you anticipate? And I've been saying throughout 2019 and early part of this year to say, things looks pretty good over the next 5 years. Why? Well, let's look at this. Housing affordability is actually better today than back in the year 2000. Why? Even though home prices are higher, well, people's incomes are higher, but the mortgage rates are much lower. In 2019, it was 4% average. Remember, in 2020 today is 3.3%, even lower. Population, we have more people living in the country. Household formation, many more. Jobs before the pandemic, 20 million more situation, but home sales were a little light. So something was a mismatch. If it was more affordable with low mortgage rates, more people living in the country, more families, more jobs, why is housing sales light? Pent up demand in the pipeline. And I said, because of the pent up demand to the brokers, as you think about the next 5 years, it's going to look good. 4 of those 5 years will be an improving year. I never say 5 out of 5 because I always give one caveat just for the unexpected. I never expected that the unexpected would be this coronavirus. Just philosophically, you know, is it the case some poor peasant out in China had some taste for exotic animal and that led to the global pandemic situation? Or is it the laboratory somehow escaping? Who knows what it is, but just philosophically, it's very strange that something happening to China that somehow impacts globally in terms of economic downturn. But this year could be a tad light on unit sales, but the next 4 years means that there's still this pent-up demand that needs to be satisfied. We need to have more inventory showing up to get the buyers excited, and that will be the case. So coronavirus impact, we recently took a flash survey of buyers and sellers. Are they expecting lower prices? Easier one is on the seller side. On the seller side, they're saying, look, this is only temporary situation. Whatever price that I was thinking of, that's the price I'm gonna list. I'm not gonna reduce 5% or 10 price. So most sellers are saying, I'm not gonna reduce price. What about the buyers? Through the pandemic, 37% believes no reduction in price, or they are not going to offer lower price. 16% believes it will be less than 5%. But you can say for buyers, generally, they never offer a listed price. They offer slightly less. So you can say the majority of the buyers do not expect lower prices at all. So both from buyer and seller perspective, they believe that market will be a very stable position once the economy reopens. And the fundamentals of economics is, we don't know about the job recovery. Certain occupation, again, many small businesses, dental offices, daycare, they will open quickly. Jobs will be there, but others not. So the job recovery situation, but the inventory shortage is just lingering. So we will have that inventory shortage going in. Stimulus measure, again, tap into all the things that is available. It's going just massive stimulus. Again, realtors should feel that they should tap into temporary resource during this government mandated lockdown. We lobbied hard to assure that's the case. Homeowners who cannot pay payments, again, their credit score would not be impacted if they miss a few months of payment, if they can demonstrate temporary economic hardship. And Federal Reserve all in. How is federal government able to fund this stimulus, massive? They're running up a large budget deficit, and large budget deficit for the most part is being printed money. The Federal Reserve is buying government bonds. So there's a lot of printing of the money. America is very fortunate that we have the US dollar. Because of the US dollar, we don't have inflation resulting from printing of the money. But nonetheless, in future years, you may say we may have a little higher than normal inflation with all this printing of the money. So rather than 1 or 2% inflation rate, which Federal Reserve says contain inflation, we may have like 4 or 5% inflation, say 5 years from now. I mean, definitely not like Venezuela, like 20% or 50% inflation, nothing like that. But say 4 or 5%. So some people may consider that to be a little above normal inflation. So they may want to buy gold as an inflation hedge. But other people may also buy tangible asset like real estate, because real estate also has been a good inflation hedge. So if there is an inflation in the future years, some people may decide to buy real estate just as an inflation hedge. Whether buying the second home in New Hampshire by Boston residents, so they may have more desire to have their real estate just for that inflation hedge situation. Also, NHAR is providing right tools right now, which offers some courses at discounted prices are free. Telemed for people without health insurance for a couple of months, free access, so you can talk to a doctor, medical professional online. So my forecast is the following: 2020, you press a pause button. We cannot simply put fast forward so we can reach the end point at the same time. We lost 2 or 3 months of economic activity. There's no way to make up for that. So it will be negative GDP growth, even with some positive numbers in the second half of the year. That will lead to job losses of about 4 million. This job losses is far less than what you see on the headline. 22 million people filed for unemployment insurance. Many people filed for unemployment insurance will be finding job in the second half of the year. So overall, it will be 4 million fewer. Therefore, the unit sales will be down about 5 to 10% in terms of home sales. We are missing the spring buying season, autumn and winter. Maybe we get some spring bounce back, but not sufficient to make up for the loss during this missed spring buying season. Home prices to be steady, but 2021, I think things will be all positive, 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 positive. So it's just unfortunate that we have to go through this pandemic period. People, safety is the most important, your health is the most important, but we have to go through this pause period. So we lost few business activity, but keep in mind the stimulus package, tap into that resources during this downtime. So thank you for your patience and thank you for your listening. Back to President Marc.
Thank you so much for those insights, Dr. Yoon. Let me start out by asking about New Hampshire as compared to the rest of the country. The national housing forecast showed jobs dropping off by 4 million in 2020 and adding 2 million in 2021, and home sales dropping 5 to 10% in 2020, but rebounding strongly in 2021. Would you expect New Hampshire to compare to the country negatively, favorably, or about the same?
New Hampshire has been always slightly better than national trend, whether job growth, so let's say national job growth rate is 1.3%. New Hampshire seems to be like 1.6%, a tad higher than the national average. Other New England states is always below the national average. Only exception, again, is Boston, not necessarily the whole state of Massachusetts. So it's always Boston doing reasonably well and New Hampshire doing reasonably well within New England area.
Thank you. If we get a little closer to looking at this year month by month, do you have a sense of when we'll see the lowest housing numbers and when that might start to turn around?
My best guess at the moment is this month in April could be the lowest point and similarly low in May. So, again, April, May should be bursting with the spring buying season activity, but we press the pause button in April or May. So sales possibly could be down 30 or 40% from last year, April, May figures. But this is just due to the fact that people are saying, I want to just stay at home. That's the government's orders. And people who don't feel comfortable visiting homes, and also just inventory. They want to see more inventory. So April and May will be the dying month. And then I think after that, it should be something comparable to last year and then make up for some of the delays that occurred from the spring. So second half of the year, the sales activity could actually be a little better than last year.
Okay. What about commercial real estate?
That is a very difficult to call because people who are in the industrial warehouses, the demand is very strong. Amazon is one of the few companies doing very well. Their stock price is high. They're still hiring people. So in the warehousing is fine. So even before the pandemic, we know that there was a shift in consumers' shopping patterns away from Main Street into online. But this pandemic has accelerated that trend. And people may feel more comfortable knowing that they have gone online shopping more. So the retail sector looks to be very tough. The office sector also could be changing because with this Zoom technology, many companies may say, oh, we can get the business done without actually meeting at offices, which also means that people may decide to say, maybe I don't have to have a home close to Boston downtown anymore. My company may provide more remote work opportunity. And if that's the case, well, New Hampshire is not too far away. So maybe they decide to have a housing in New Hampshire and commute to Boston only twice a week or a much less frequent situation. And another experience that many people are feeling is that they thought they had the right house, suddenly realize they want to have a dedicated office space or maybe a little more elbow room. And going into more rural area, people can find a more affordable but larger size home. And maybe this could be a trend in the future years.
Do you see any validity in talk about a rural exodus from the cities after this is all over?
I think there could be a revival of the suburbs. Let me put it this way. For the past 5 years, there was a revival of downtowns. Every places, whether Portland, Maine, Boston, there was a desire among millennials to live in tight quarters, walkability, because that's where all the actions were, restaurants, bar scene. But now with this, and the possibility of needing to ride elevators, crowded spaces, I think people may say, well, pandemic, COVID-19, will they be COVID number 20 or 23 or whatever that is? So given that, that people may desire a single family further out. Also related to commercial real estate, one thing that that could happen is for some smart entrepreneurs to say, all these retail spaces at a shopping mall that is becoming vacant, is it possible to convert those empty shopping mall into a healthcare armory? In essence, in case of an emergency, they have all the production possibility to make masks, ventilators, so all ready to go. But during normal times, it's just an armory, it's just to make sure. But if we needed it, we can upstart it, and extra hospital bed, everything like this. So maybe there's an entrepreneur who can think through to say that shopping mall right there is within a reasonable distance to many residences, essentially located in terms of the physical drive distance. And that could be something I would like to see from the federal government providing the money, and then we transfer that money into a healthcare armory ready to go just in case there's a next pandemic.
Just a couple more questions, if I may. What do you see as the long and short-term impact on the second home market?
Second home market, the long-term impact should be good because baby boomers, assuming the stock market do recover somewhat, maybe not the all-time high, but combination of stock market and real estate value going up has provided the baby boomers retiring into a situation where they can have their second home. And also with a pandemic, which we discussed, maybe people feel more comfortable, more further away, and the remote work possibility expanding. So I think, that's, but in the short term, it's really hard to say because it would depend upon the path of the virus. People who are unemployed, panicking a bit and wanting to know when they will get back. So that short term is more difficult, but the long term, I think demographics would suggest favorable second home market.
And finally, what do you say to realtors who are nervous about the real estate market?
First, even in a normal time, real estate is a very tough business. Our data shows that about 20% truly succeed very well, six-figure commission income, but the 30%, they're only getting 2-3 transactions a year. Maybe they just view it as part-time supplement the overall household income. So it's already a tough business. And people sometimes, want to try out real estate. It fits in. Other people, they say, well, I tried it, but it doesn't fit in. So there's always churning even in a normal year. But in the current environment, I think just have to understand sort of the facts. Facts is that housing market was exceptionally strong. We hit a pause button. It will recover. Second half cannot fully recover, compensate. So the overall year, the unit sale will be a little light. But going into 2021, it looks all good. And with this background, I guess it's really individual decision on how to do their business. But one survey we consistently find is, clients, the number one factor as to why they chose the realtor is the trust. If they trust their realtor, they makes everything easy. So during this time period, maybe you want to contact your past client to say, do you know about low mortgage rates, refinance, or people who are facing difficulty in mortgage forbearance, give them some information, just developing that trust.
Great. Dr. Yoon, it's been such a privilege to have you here with us today. Thank you so much for sharing your insights as always. I hope that you'll be safe and be well, and we'll see you at our next convention, I hope.
Enjoyed participating with you, Mark, and thank you, Dave, for setting this up.